Jonathan and the Dallas Shuttlesworth and the whole Revival Today team. We just finished a phenomenal Jesus Crusade in Chilabombe where we witnessed 87,271 decisions for Jesus Christ. In the morning of the Jesus Crusade, we also had a pastors conference where we literally had pastors, hundreds of pastors and leaders from all over the city come together to be equipped with the Word of God and to also receive a fresh touch of the fire of God.
And we just want to say thank you so much for loving us, for partnering with
our
us.
Family.
Yes, we appreciate you so much and we love you and we cannot wait to see you soon.
Yes, love you all.
Hello, Brother Jonathan and Sister Dallas, everyone who's a part of Revival Today. This is Stephen from Feed the Hungry. We're so grateful for your partnership. Together, we're reaching almost 450,000 children in 24 nations of the world, answering the prayer of those who cry out, Lord, give us this day our daily bread. That food is a little key that opens up great big doors, and the gospel is gaining entry into hearts, homes, and communities amongst every people group that we're reaching. The kingdom of God is being established and built, and we're able to expand into places where there's great need, like in Karamoja, a part of northeastern Uganda, right on the border of South Sudan and Kenya. A tremendous famine is taking the land. Thousands of people are dying on a monthly basis, especially the marginalized, the elderly, the infirm, and the very young. We were able to reach out into this particular people group, the Karamojan, who are unchurched and unreached, bringing food and bringing the gospel that's impacting their hearts and lives. Pastor Solomon, our man in Uganda, has been diligent, sacrificially going up week after week to bring food and to do the hard work to see the church rise up in this desolate place. We can expand and we can grow and we can answer these cries for help because of friends like you. And we are so grateful for all that you're doing. May the Lord bless you and keep you. May His face shine upon you, and may you do more than ever before in Jesus' name, because of your care for the hungry, because of your compassion for those in need.
Coming to you from Main Street, America, in the heart of Rust Country, home of industrial titans like Carnegie and the Mellons, we are bringing you market analysis, news, and everything you need to know about the economy and investing. Live from Pittsburgh, Pennsylvania, it's Check the Market.
Good morning, everybody. Welcome to Check the Market. How's everybody doing? Welcome, welcome. Thanks for tuning in. Wayne is still in Buenos Aires. Can you make the comments bigger? Oh, there we go. Perfect. Welcome from Ghana, Sandra, Jonathan, Patrick. Welcome, everybody, to Check the Market. We're going to be going over the Fed meeting today. Sarah from London, Ontario. Welcome to Check the Market, where we check the market. We had a little bit of a break there, a little bit of a summer break, traveling back and forth, big things happening here at Revival Today. And so we took a little bit of a break, but we're back. Thank you, Patrick. David from Hutchinson, Minnesota, thanks for tuning in to Check the Market, where we check the market. The BRICS Summit, yes, BRICS is growing. I saw a graph the other day of the G7 and BRICS and how much of the global economy they controlled, and how how BRICS has increased their control over the global economy over the last couple of years. So it's interesting to see how all of that is shaping up, how all of that is happening. Thank you, Sandra. Make sure to share the broadcast. We're going to be back with some market analysis, some stock market, some stock picks. Sarah, lives in London, Ontario. What is the first step to investing? Where, when, how much, and with who? These are all great questions. First step to investing is to open up an investment account. Where, since you're in Canada, I'm not too sure what the best platforms there are. In the United States, that would be, you can start investing on Cash App, you can start investing on Robinhood. Those are easier ones that you can invest on. When, I would say every month, how much as you'd like. You'd start with a small amount, $5, $10, $20, $50, whatever you feel comfortable with. And then with who, if you want to have a financial advisor, that would, you can look for a financial advisor. Make sure that they are a fiduciary and make sure that they have the customer's best interest at heart. That usually is some sort of pledge or some sort of something that they give you. David invests on Robinhood and it works great. I'm not sure if Robinhood is available in Canada. I think that's only available in the United States, but I'm sure they have apps in Canada that also make it easy to invest. And there are some good stocks on the Toronto Stock Exchange that you can invest in. All right, well, let's get into it this morning. Welcome back, everybody. Money market funds hit record as investors jump at 5% returns. So currently we're getting 5% returns on most money markets, 5.15, and the balances are at a record high of $5.5 trillion in money market accounts, which is smart to have any excess cash in a money market account. Money market mutual funds are earning the highest interest rates in decades, making them an increasingly attractive option for investors seeking higher yields with relatively low risk. Savers are reaping the rewards of high returns on money market mutual funds, which typically hold lower risk investments like treasuries and some types of corporate bonds that present investors with lower risk alternatives than what they would see in stocks. Money markets are often treated similar to savings accounts, as they afford investors a relatively safe and liquid means of stashing their cash. Money market funds are paying an average interest rate of 5.15%, so that's just under inflation there. So if you have your money in your savings account, you're losing money. If you have money in a checking account, you're losing money. You might want to put it in, if you're not going to invest, I would put it in one of these money market mutual funds and get your 5.15% return on it. A Wall Street Journal analysis of the Cramer 100 Money Fund Index, which is based on an average of the 100 largest taxable money market funds, found that money market yields last touched 5% in 2008 before declining to near zero over the next 2 years as the financial crisis roiled the economy. Money market yields remained near zero till 2016 when they began a steady rise to over 2% through 2019 before they declined to near zero amid the COVID pandemic. So this would be a tip that I have for you. If you have money just laying around, I would put it in one of these money market mutual funds. All you have to do is Google money market mutual funds. I can tell you the one that I have some in. Give me 1 second here. Let me pull that up. It is the Schwab U.S. Treasury Money Fund Investor, and it is SNSXX. The ticker symbol is SNSXX. Ludmilla, it's your birthday. Happy birthday from us here at Check the Market. Oh, awesome. If you have dual citizenship, Sarah, then I would download the Robinhood app. You can use it in Canada too. I've used it overseas, and start investing on that one. It's very easy to invest. They make it easy. They actually have updated the app a lot. I got it way back when it first started, but they've updated it a lot. And yes, you can invest in the USA. You can invest in the US stock market. Continue. Let's see what's next. We can go to the next one. Dick's Sporting Goods shares fall 20% as retailer slashes outlook over theft concerns. Now, this is crazy. When I saw this, I was 20% because of theft concerns. Let's see it. Dick's Sporting Goods, which is headquartered here in Pittsburgh, it's actually right down the road from where we are, reported a 23% drop in profits and slashed its earnings guidance for the year after it saw an uptick in retail theft and slow sales in its outdoor category, the company announced on Tuesday. In a rare miss for the athletic apparel retailer, Dick's fell short of Wall Street's estimates on the top and bottom lines, announced cuts to its global headcount. Shares fell about 20% in pre-market trading. Earnings per share was $2.82 versus 3.81 expected, and revenue was $3.22 billion versus 3.24 expected. The company's reported net income for the 3-month period that ended in July 29th, was $244 million or $2.82 per share, compared with $318 million or $3.25 per share a year earlier. Sales rose to $3.22 billion from $3.11 billion a year earlier. The company lowered its profit for the year in part because it expects shrink, a retail industry term that refers to inventory lost by theft or internal issues, to get worse before it gets better. How about just enforce and not let there be any theft? Our Q2 profitability was short of our expectations due in large part to the impact of elevated inventory shrink, an increasingly serious issue impacting many retailers. CEO Lauren Hobart said in a news release, despite moderating our 2023 EPS outlook, the enthusiasm we have for our business and the confidence we have in our long-term growth opportunities has never been stronger. Continue. Dick's now expects earnings of $11.33 to $12.13 per share for the year, compared to previously issuing guidance of $12.90 to $13.80. It reaffirmed its comparable store sales forecast of flat up to 2% and isn't cutting its planned capital expenditures. Despite the profits lost during the quarter, the retailer still expects gross margins, and so on and so forth. The reference to shrink is the first that Dick's has made in an earnings call or press release in nearly 20 years, according to FactSet. Similar to other retailers that reported earnings last quarter, the reference comes at a time that Dick's profits are under pressure from numerous sources, including a slowdown in its outdoor category, which includes hard goods like camping equipment. I want to know exactly what the amount is. There's another one that I sent. It was a tweet, Femina, about Target. Yes, that one. So I would like to know what the exact number is. I haven't looked over their release or anything like that, so I don't have an exact number. But this is Target's right here. Target is paying the price for woke activists, reporting $1.3 billion lost in industrial scale shoplifting and five-finger discounts, as stock price dumps $15 billion on brave and stunning merchandise choices. Corporate America is ripping off shareholders and driving away customers to keep the activists at bay for one more day. Time to instead tear off the Band-Aid and stand up to them, get back to serving the customers, employees, and shareholders who once put trust in Target. So this is Target. Target lost $1.3 billion in shoplifting and shrink, which is an insane amount of money to lose. So I would like to know what's happening with Dick's Sporting Goods there, and how much other retailers are in pain as well. Do we have the video, Femina?
Retailer Target came out with its latest earnings that laid out just what's happening in the economy, in our collapsing cities, and the enormous price big business is now paying to appease their woke activists.
Target has been taking heat on social media and in its stores over some of its LGBTQ merchandise.
Target sales were down 5.5%, missing expectations of 3.5% decline, and a huge miss to their biggest competitors, Walmart and TJ Maxx, who both recently announced. For the first time in 4 years, Target's traffic, the number of shoppers in stores, went down. Well, paying shoppers, more on that in a moment. Their earnings held up mostly because a year ago they were liquidating a glut of unsold inventory that is now apparently liquidated. Still, Target's earnings multiple, their stock price per dollar of sales, is now lower than Walmart's, which is quite embarrassing. So what happened? First, Target admitted the Pride Month backlash. They were heavily promoting trans swimwear to kids, pushed sales, quote, sharply lower amid a consumer boycott, hitting profits and dropping the stock 22%. That's about $15 billion. I'm guessing they were not making $15 billion on the brave and stunning swimwear, given the CEO promise to tone it down going forward. The other interesting detail was the industrial scale shoplifting. Target reported a loss $1.3 billion in inventory shrink, the corporate name for theft. For perspective, that means about 1 in 20 items sold at Target were actually stolen.
Pause it.
Which is
1 in 20. As a shareholder, I don't own any shares of Target. But if I was a shareholder in Target, that's insane, and that they're not doing anything about it. But again, I guess with the state laws that are in place, in some states they can't do anything about it. But that is an insane amount of money. 1 in 20 items was stolen. That's crazy. So get a job at Target, clean out their warehouse, and sell it on Etsy and Amazon and eBay. Make some extra money. All right, continue. Sandwich maker Subway nears $10 billion deal to be sold to private equity firm. Looks like Subway is being sold. Whoa. That music just went up real loud, Firmino there. Can you turn it down a little bit? In the studio? Thank you. Oh, before we do that, Sarah has a question. I have 1,000 in savings. How much to start with? Here's what I usually say. If you don't want to lose the money, don't invest it. You have to be willing to lose the money to invest it in the stock market. So what I would do is I would take a look at how much of that, you're willing to lose in the stock market, that you're willing to part with, and invest that, because psychologically you have to get over that fear of losing it before you can invest it. And so what I do is 80% of my investments go into what I call safer investments, and 20% go into riskier investments. So that's what I do. Oh, markets are open. Look at that, Ninja. Thank you for reminding me. 9:34. We're late a little bit. Let's see. Let's take a look at the markets here. And it looks like the Dow Jones is now down a little bit. It was up earlier. We're down about 20 points on the Dow Jones, up 16 on the S&P, and up over 100 on the NASDAQ, which the NASDAQ had a great day yesterday as well. So that's the open for the market. Let's take a look at oil and gold as well. Oil is down just a little bit. And gold is up for another day. Cryptocurrencies, let's take a look here. Bitcoin is up slightly, Ethereum down slightly. It looks like a mixed bag here for cryptocurrency. XRP 52 cents, which they settled the case, and still not up yet, or they did. I guess it was thrown out, but it's going to get appealed anyway. All right, let's take a look at the Subway article. Sandwich maker Subway nears $10 billion deal. Let's see the article. Rick from South Dakota wants to know what silver's doing. Silver's up too. Silver's up 0.11% today at $23.37 per ounce. The Subway sandwich shop chain is set to be sold off to a private equity firm for $9.6 billion. The Wall Street Journal reported that Rourke Capital has pulled ahead of rival bidders TDR and Sycamore to acquire the company, though it's still possible another group could come back with a higher offer. Subway had $9.8 billion in domestic sales last year. The report said, quoting market research firm Technomic, those sales peaked in 2012. Rourke's portfolio, that's probably when I stopped eating Subway, in 2012. Rourke's portfolio includes a host of restaurant and food icons, including the fast food chains Arby's, Carl's Jr., and Jimmy John's. I haven't stopped eating Jimmy John's though. Continue. These stocks are moving the most today. Lowe's, Dick's, Fabrinet, Baidu, Tesla, Zoom Video, and more. So these is just a rundown of the stocks that are moving. Let me see them. Let's see what's going on here. Lowe's reported second quarter earnings of $4.56 a share, beating Wall Street forecasts. Comparable store sales fell 1.6 in the quarter, narrower than the 2.6 drop. So Lowe's is doing well. They're sticking to their fiscal year guidance, citing a strong spring recovery. A lot of people are hanging onto their homes and doing improvements instead with the current price of mortgages, with the 7% interest that you have to pay. Next, or continue, I guess. We already talked about Dick's Sporting Goods, Fabrinet, high-tech manufacturing, Baidu. U.S. listed shares of Baidu were rising 4.2% in pre-market trading after Chinese tech giant reported quarterly earnings that beat analysts' expectations. Continue. Tesla was rising 3.5% in pre-market trading after closing 7.3% higher on Tuesday. Look at that. Continue. Zoom also did well. Macy's slid 1.4% after the retailer delivered better than expected second quarter earnings, but it said it was taking a cautious approach to guidance given the ongoing macroeconomic pressures facing shoppers. And we'll see how that all plays out since it's next month that student loan payments start back up. Question, would you put money in a market fund monthly, take it out to pay card? I wouldn't put into those money market funds. I wouldn't put anything in there that I needed right away. So yeah, I mean monthly, I would do that monthly. You just have to make sure that you hit the dates right, because there's dates when they want you to be in the fund for you to get your percentage payout. Why did I stop eating Subway? When I worked in the oil field, I ate Subway all the time, and it was just quick and easy to get, and I guess I just haven't gone back since. Where would I invest? Right now, I haven't bought a stock in a while. I've been trading options, but that's about it. I haven't bought any stocks. I haven't found anything that I like that I would like to buy. What I would do, Sarah, is what companies interest you, and then research a company that you'd like to invest in. That's how I started. I started way back in high school. Even before high school. I've always been interested in cars, and so there's I'm sure you know, there's a vehicle company called Porsche, and I was interested in them. I was on their website. I would look at the cars, and I realized that I could actually invest in it and own a piece of it. So I couldn't afford a Porsche. So what I did was I bought the company, and that was back in the day, back in high school. And because I was interested in it, it was easy for me to research the stock and see how they're doing, and because I was interested in the company. So that is something that I would recommend you do. You know, whatever companies you're interested in, research them, see if they're traded publicly, and then if that's something you'd be interested in investing in, that's where I would invest. That's where I would start. Or I would start with one of the bigger companies where you wouldn't lose too much. Microsoft, Tesla, one of those big ones, Amazon. Those are the ones that I would take a look at investing first, just to get your feet wet. All right, continue. ETF that tracks Jim Cramer's stock picks to close. The long Cramer, so there's two of them. There's the LGIM and SGIM. The long Cramer ETF is up 3.3% since its launch. Let's see it. An exchange-traded fund set up to buy stocks recommended by CNBC personnel Jim Cramer will be closed and liquidated. Its provider said Monday shares of the long Cramer tracker ETF LGIM will see their last day of trading on CBOE on September 11th, which will also be the last day the fund will accept creation units from authorized participants. Tuttle Capital Management said in a news release Monday afternoon, "We started LGIM in order to facilitate a conversation with Jim Cramer around his stock picks as the other side to the short Cramer ETF SGIM," said Matthew Tuttle, the fund's advisor, in the news release. Continue. Unfortunately, Mr. Cramer and CNBC have been unwilling to engage in dialogue, I'm not surprised, and instead have chosen to ignore the funds. Therefore, there's no reason to keep the long side going. Going forward, we'll just focus on the short side. So they were trying to be fair to Jim Cramer and have both the long and the short side, but since he's not cooperating, they're just gonna go with the short side and see how much money they can make off of his stock picks. Going forward, we'll just focus on the short side. CNBC didn't immediately respond to a request for comment. The inverse Cramer ETF aims to achieve the inverse of Cramer's recommendations by going short anything he recommends buying and going long anything he doesn't like. The ETFs were launched in March. Let me see what the, I haven't looked at it in a while. The inverse Cramer, how it's doing. Ooh, it's down on the year. Let's check the year to date. It's down slightly. It was down a lot there in July. But it's down just slightly, the SGIM. For those of you who invested. Costco? Yeah, Costco would be a good one to invest in. That's a big one. I bought SoundHound AI at $450 and it's now under $250. At least I have physical silver and gold. Yes, physical silver and gold is always good. Jim Cramer has great picks, just do the opposite. Yes. But you have to make sure you time it as well, because I think that's what SGIM is doing wrong sometimes, is that they're not timing it properly. Continue. Macy's earnings beat estimates, but execs send warning signal on the health of American shoppers. I haven't read this one yet, but I was interested to see what it says. The department store revealed credit card delinquencies rose faster than expected and weighed on revenue. Yet another retail giant took a cautious outlook on consumers. Macy's posted a beat on earnings estimate on Tuesday before the market opened, but the department store pointed out that its credit card business is under pressure. In Q2 earnings report, the company highlighted a decline in credit card revenues, which were negatively impacted by an increased rate of delinquencies across all stages of age balances within the portfolio. The company said while it expected delinquencies to rise as part of the normalizing credit environment, the speed at which the increase occurred for the company and the broader credit card industry since the company's first quarter earnings call was faster than expected. Net revenue came in at $5.13 billion, higher than analysts' estimates of $5.1 billion. However, credit card revenue dragged that down, the other revenue category for the retailer, which saw an $84 million decrease from last year. Million. CFO Adrian Mitchell provided more color on a call with investors. He said, while we have seen an increase in revenues as interest rates have risen, that has been more than offset by higher bad debt assumptions and write-offs. These bad debt assumptions and write-offs are the result of rising delinquencies, which lead to higher net credit losses over time and contributes to increased bad debt within the portfolio. So they're having a problem with their credit cards and their store cards. It looks like that's what's dragging it down. And I think a lot of these retailers are being cautious, especially with the savings rate of the American consumer, that savings has almost completely been depleted. And now we're getting back to where student loan payments start again. So we'll see how that will all affect the market. What is DRLL? Let me take a look. Strive US Energy. Oh, Sandra, DRLL. Drill is doing well and pays dividends. That's Strive US Energy ETF. It's an ETF of energy companies. 2.72% dividend yield. So Sarah, that's also something that you want to take a look at, especially as a beginner investor, is not to get caught up in a lot of the hype, but to take a look at some of the more safer things that actually pay dividends, like the one that Sandra said, DRLL. Jonathan Britton says never sell. I actually have an article that complements that. The one about Apple, Famina. The guy that, yes, there we go. Look at that, perfect, great job. Apple's lesser-known co-founder owned 1/3 of the company, but missed out on a potential $900 billion fortune. So this is where never sell comes in, Jonathan Britton said. With the late Steve Jobs and Steve Wozniak, Apple Inc.'s co-founders, I just thought this was an interesting article, dominating the tech world for decades, it's easy to overlook the vital role played by a lesser-known figure, Mike Markula. I'd never heard of him until I read this article. While Jobs and Wozniak captured the limelight, Markula's contributions to Apple's success were no less significant. From angel investor to CEO and chairman, Markula's journey with Apple showcased his belief in the power of personal computers. Continue. This is just the background here. Born on, we're going all the way back to birth. All right, let's go. Markula's career at Fairchild Semiconductor International and Intel Corp, where he retired as a millionaire at the young age of 32, showcased his deep understanding of the tech landscape. All right, so what did he do here? Fueling his conviction with action, Markula emerged from retirement in 1977, becoming an angel investor in Apple. His $250,000 investment, a combination of loans and equity, solidified his position as the second CEO, third employee, and a significant 1/3 owner of the budding company. In 2023, a 1/3 stake in Apple would be worth about $900 billion. So that would clearly make him the richest man on earth. This unfortunate reality for Markula highlights an important lesson for investors and the general potential with longer-term investments and the lucrative but volatile nature of startups. For example, despite the recent decline in venture capital, retail investors have invested over $1 billion through startup investing platforms like Start Engine. Got a little plug there. Continue. Markula, 8 years older than Wozniak and 13 years older than Jobs, brought a mature perspective and technical prowess to the table. His contributions. All right, so he invested. Apple's sales skyrocketed, with revenue climbing from $773,000 in 1977 to $117 million in 1980, the year the company's initial public offering. Markula's equity investment yielded a $220,552% gain, leaving his shares worth $203 million. Continue. Let's see, did he sell? In 1996, an article reported that Markula sold 500,000 shares, amounting to 14% of his stake in the company, but he still retained 3.1 million shares, making him the largest individual shareholder at that time. Despite retiring from Apple in 1997, continue. Let's see if he sold some more. Oh, that was it. Well, he didn't sell it for 900 billion, that's for sure, but that's why you never sell. Sam's Club, yes, Sarah. Sam's Club is under the Walmart brand. WMT, Walmart. Continue. There are two big catalysts. Let's get into the Fed meeting. There's a Fed meeting happening this week. I believe it starts on Thursday and ends on Saturday. There are two big catalysts that could spark a stock market rally this week. Let's see it. What are the two? Investors should expect a stock market rally this week amid two big catalysts, according to Fundstrat's Tom Lee. Lee expects solid earnings from Nvidia and dovish comments from Fed Chair Jerome Powell at Jackson Hole. They're all heading to Jackson Hole for the weekend. I think the Fed might be worried something's going to break amid a renewed surge in interest rates. The stock market's 5% sell-off in August is likely to find its bottom this week and stage a rally amid two big market-moving catalysts, according to Fundstrat's Tom Lee. We'll see if he's right. The decline in stocks over the past few weeks has been driven by Fitch's downgrade of U.S. debt, poor seasonality, and slowing economic data out of China, but those issues could soon be overshadowed by Nvidia and Jerome Powell. In a Monday note, Lee highlighted that Nvidia's earnings report after the market closed on Wednesday and Federal Reserve Chairman Jerome Powell's speech at Jackson Hole on Friday represent big market-shaking catalysts that could spark a surge in stock prices. Stock risk/reward has shifted positively this week. The key will be the direction of interest rates, but we see positive catalysts emerging at the end of this week. They said that there might actually be a rate cut in November is when they're estimating there might actually be a rate cut. This is due to, I think it's gonna, play in with what they see happening with the student loan payments getting back on and things like that. Stock market Dow Jones is still down slightly. It's trading pretty flat. Nasdaq is up 0.37%. All right, let's see the next Fed article. Jackson Hole meeting. When is Jerome Powell's speech and what investors need to know? The Fed chairman speaks at the Jackson Hole summit on Friday morning. With so much uncertainty over U.S. economic outlook, financial markets will be paying close attention. Continue. The eyes of investors around the world will be watching Wyoming this week as the Federal Reserve's annual Jackson Hole retreat kicks off on Thursday, August 24th and runs through Saturday, August 26th. The meeting is expected to attract interest across global markets and could present insight into the short and long-term policy intentions of Fed Chair Jerome Powell. What is the Jackson Hole meeting? The Federal Reserve Bank of Kansas City has hosted this annual economic policy conference since 1978. The event location moved to Jackson Hole Lake Lodge at the base of the Grand Tetons in 1982. Yeah, because, that's a nicer location. The world-renowned economists will discuss their latest research papers, and key central bankers from around the world will give speeches on the policy outlook. The conference is designed for casual, off-the-record discussion of the latest economic trends. Economists and central bankers enjoy meals together and participate in outdoor activities in the long afternoon hours. Well, good for them. Continue. What is the topic for this year's Jackson Hole meeting? Structural shifts in global economy. Fairly vague. Economists think the hot topic is whether the U.S. economy will return to low interest rates and those 2% 30-year mortgage rates seen before the pandemic, or whether that was an era that will fade into the history books. All eyes will be at the Federal Reserve Chairman Jerome Powell, who's headlining the conference. He's going to have a speech. Whenever he speaks, the market moves, and so it's going to be interesting to see. Continue. When is Powell's speech? Friday. Continue. Will there be another Fed rate hike? That is the question on everybody's mind. This is one of the key questions. In July, the Fed raised its benchmark interest rate to a range of 5.25 to 5.5, the highest the Fed target rate had been since 2001. The next Fed meeting begins September 19th. I would say it's possible we could raise rates at the September meeting if the data warranted, and possible we could choose to hold steady at that meeting. Traders saw a 13.5% chance of a rate hike in September as of Monday, as of yesterday. There are only 3 Fed policy meetings left in 2023. Financial markets also want to hear if there will be rate hikes in 2024. So it's like an American pillar, I guess, yes. All right, next. You can watch it on Kansas City's Fed's website if you're interested in that. Oh, this is an interesting story. Let's keep with the Fed one though, see if there's another one, and then we'll go to this one last. What should investors anticipate from Powell's address? Let's see it. Up to 120 participants will convene at Jackson Hole, which plays a pivotal role. All right, let's get into the Powell's comments last year suggesting a possible deceleration in rate hikes and a more dovish stance. That's what's important. Triggered significant market reactions. The S&P 500 positively reacted initially before extending its downward trend until mid-October 2022. Continue. What can we expect from him? Let's take a look. Bank of America believes the Federal Reserve Chair Jerome Powell might use the summit to reaffirm the central bank's commitment to achieving its 2% inflation target, which if he does that might mean the market's going to go down because they're looking at more rate hikes. Markets might interpret this as a sign, yes. Goldman Sachs forecasts softer tones from Fed Chair Powell during his speech. Current scenario indicates the potential for a smoother transition, and this time around the prospects for a soft landing are higher than in the past year. Continue. Top Wall Street analyst says Fed meeting. Oh, we already read that. That's that one guy. All right, let's go to the Ford article, and we'll end with this one. Man forced to ditch Ford EV truck during family road trip to Chicago. Biggest scam of modern times. In China, I read an article this morning that China was there's just tons of EVs that are piling up in junkyards because people are going back to gas-driven vehicles. Bala said he was initially moved to buy an environmentally friendly vehicle, as owning one is a responsible citizenship. I'm sure it is. Continue. A Canadian man is calling electric vehicles the biggest scam of modern times after his frustrating experience with an electric truck. Dalbir Bala, who lives in the Winnipeg area, bought a Ford F-150 Lightning for 115,000 Canadian dollars plus tax. The manufacturer's suggested retail price on the vehicle is $77,000. He told Fox Business he needed the vehicle for work, but also wanted something suitable for recreational activities such as driving to his cabin or going fishing. He also wanted an environmentally friendly vehicle, as owning one is responsible citizenship these days. Continue. Let's see what happened. But he quickly hit with the reality of owning. The vehicle compelled him to install 2 chargers, one at work, one at home, for $10,000. To accommodate the charger, he had to upgrade his home's electric panel for $6,000. So now he spent more than $130,000 plus tax. Then he had to take it in for service, didn't get it back for 6 months. He said no one from Ford answered his email or phone calls for help. The limitations of the EV truck became even more apparent when he embarked on a 1,400-mile road trip to Chicago. Fast charging stations, which only charge EVs up to 90%, cost more than gas for the same mileage. I hope we don't get a strike for saying that. On the family's first stop in Fargo, North Dakota, it took 2 hours and $56 to charge his vehicle from 10% to 90%. The charge was good for another 215 miles. So he's paying more than gas. Continue. That was his charging activity. Continue. On the second stop in Albertville, Minnesota, the free charger was faulty and the second phone number on charging station was also of no help. He said the family drove to another charging station in Elk River, Minnesota, but the charger was faulty there as well. The sheer helplessness was mind-boggling. My kids and wife were really worried and stressed at this point. The Wright-Hennepin Cooperative Electric Association has disputed Bala's account, saying the charge was prohibited because of a vehicle protocol error, suggesting the problem was with the vehicle, not the charger. It's never anybody else's fault. This is verified further because the charging station's reporting shows several successful uses before and immediately after this incident. Well, good for you. Continue. Bala said he ultimately had the vehicle towed to a Ford dealership in Elk River and rented a regular gasoline-powered vehicle to complete the family trip to Chicago. The family picked up the F-150 Lightning on their way back to Winnipeg. This is like the new version of National Lampoon's Vacation. Take an electric vehicle and get into all sorts of trouble. At the end, have to rent a gasoline-powered vehicle. So you know me, I've got to bash on electric vehicles every now and then. And what a good place to stop there for today. There's one more thing that I wanted to share with you. And that is, I was listening to a podcast and it was talking about the psychology of investing and how it's important that you get through some of those psychological barriers to be a better investor. So there's a couple here. Number one is the overconfidence bias. Overestimating one's ability to predict market movements. I do that sometimes. But the solution to this is to recognize that the market is unpredictable and diversify investments to mitigate risk. So you'll never be able to 100% time the market. Confirmation bias, seeking information that confirms existing beliefs and ignoring contradictory evidence, especially if you love a company very much and you would like to be a long-term investor. But sometimes you have to seek other opinions when it comes to investments because that company might not be as good as you think it is. Let's see what else here. Herd mentality is a big one. Follow the crowd without independent analysis. Conduct independent research. This is what I always say. Make sure you do your own research. Conduct independent research and make decisions based on your individual financial goals. Regret, aversion, fear of making a wrong decision leading to inaction. This is one of the biggest ones, especially for beginner investors. It's like, I don't want to make a bad decision, but the only way for you to start learning is to start investing. And accept that not all decisions will be perfect and focus on a well thought out investment strategy. That's why it's important for you to have an investment strategy. And then lastly, emotional investing, allowing emotions like fear and greed to drive your investment decisions. We saw a lot of that going into 2021 where there was a lot of greed, 2022 even a lot of greed in the markets in the beginning of the year. But develop a clear investment plan and stick to it, regardless of emotional reactions to market changes. Sometimes I take a couple of days break. What I do is I don't even look at my portfolio for a couple of days because I'm getting too emotional, especially if the market goes down more than 2 days in a row. I get way too emotional about it and I'm losing money. All of these thoughts I'm sure that everybody has, and so what you do is you just shut down the app and not look at it for a couple of days, and then when you're back in it, it's already too late at that point, and all you can do is wait for your stocks to go back up. Good to see you too, Ninja. All right, well, that's it for me today. I don't have a stock to research or a stock to take a look at. I haven't bought one in a while. I've been trading some options, but I am going to look at a couple. I have a list of a couple that I want to take a look at, and I'll let you know about those. Let's see. Announcements. Do we have any announcements? Femina? Back to School Fest this Saturday. Is it this Saturday? That's this Saturday. August 26th, Back to School Fest. Doors open at 11 a.m., starts at 12 p.m. at the Montour Junction Sports Complex. Got 1,000 plus backpacks filled with school supplies and over $10,000 in free giveaways. So this is an outreach. Make it out. Continue. What else we got? Volunteer meeting for the Back to School Fest, Friday, August 25th at 6 p.m. What else we got? The launch of Revival Today Fort Worth. I was just there this last week. October 1st through the 21st, 21-day revival, 10 a.m. and 7 p.m. on Sunday, and Monday through Friday at 7 p.m. Make sure you sign up at revivaltoday.com/RTC Fort Worth. Continue. And young adults every Tuesday at 7, and youth Fridays at 7. Thursdays at 7. And if you, Wednesday night breakthrough service, make it out to one of these services if you can. If you're anywhere within driving distance of Revival Today. The best church, my opinion, the best church in the world. If you'd like to invest in Revival Today, here is the opportunity to do that. Here are the ways to give: Cash App, Venmo, PayPal. You can also give cryptocurrencies. You can text RT to 50155. You can send your gift to Revival Today, P.O. Box 7, Prosperity, Pennsylvania 15329. And then what I'm going to do is I'm going to give away How to Make Money in the Stock Market by William J. O'Neill. For anybody who's new to investing, this is one of the books that you need to read, and we'll give that as a thank you. So thank you so much for tuning in, and make sure you share the broadcast if it helped you. We do have a couple more. I believe we have them archived on the app, so make sure you download the app, the Revival Today app. A lot of the shows are archived on there, so if you're new to investing, there are a couple where we go over, how to develop a trading strategy, etc. And I'll go over a couple of those things again here. Well, thank you so much for tuning in. Go out there and make some money, and I will see you all next week.